today. But moving on, one we don't discuss too often is Hariom Pipes. They came out with a provisional update. Nigel joins in with more details.
Well, that's right. Hariom Pipes, if you look at it from the recent high of more than 800 rupees, the stock saw a sharp correction. In fact, it halved from the top. But the last couple of days, it's been buzzing on solid volumes. One particular reason is that over the weekend, we got their quarterly update, and they look rock solid. So if you look at the volume number, there's a solid growth of more than 30% on a year-on-year basis. And as we know, the value-added products as a percentage of their total mix is rather high. So this is something that the street has caught on to. Besides that, at the start of this year, they had promised a 30% volume growth, not only for FY26, but for FY27 as well. They said for the next couple of years, they're looking at a volume growth of closer to 30%. Besides that, they're going to be ramping up their expanded facility with particular focus on value-added steel. They're also looking at further spreading their wings in Tier 2, Tier 3, as well as in rural markets. And they're also looking at strengthening their presence, their dealer network, both in Western as well as Northern India. So put all this together, the Q1 numbers, well, it's walking the talk because they've guided for 30% and they've delivered more than 30%. The street likes that. Well, just to give a reference point, if you look at APL Apollo, on a very, very large base, that one delivered a growth of only around 10% on a year-on-year basis, while Hariom, that's total capacity, around 700,000 tons, is equal to what APL Apollo delivered in the first quarter itself. Though on a larger base, APL Apollo delivered only 10% growth, Hariom has delivered close to around 30% growth. And APL Apollo, actually, they're lagging behind because for the year, they have given a 20% volume growth. So we'll have to see how they catch up in the coming quarters. Nonetheless, the street likes it. They also have some valuation comfort because it trades at around 10 times EV on EBITDA. Larger players like an APL Apollo trade at around 30 times EV on EBITDA. Even the recent listing, actually, Sadbhav Steel Tubes, that trades at around 35 times on a PAT basis, while this smaller name trades at around 25 times on a trailing PAT basis. So put all this together, good operational update, promising better times ahead, and valuation comfort is the reason that Hariom Pipes, after correcting to nearly half of what it was, has popped up in trade.
All right, that explains the move. Thank you so much, Nigel, for joining us and explaining to us what's happening with this particular stock, the pipes